It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
Some of the expert psychologists around the world say that after the November midterm elections in the US, Trump is going to be stripped of power, with the Democrats taking control of the House and also possibly the Senate, leaving him a lame duck president. However, the one thing that Trump has still got is the nuclear codes. And one psychologist, as scary as this sounds, says that he thinks that Trump wants to press the button. And if you don't believe it, I guess just wait, because the same psychologist says something is coming and it won't be good. Is what we are starting to see right now the beginning of a 2.0 version of the GFC? Because nobody knows. Anyone giving definitive answers is guessing. How can you guess Trump's brain? It's impossible. And one of the countries that is struggling at the moment in terms of their economy is New Zealand. Gareth, the Reserve Bank says the economy in New Zealand was recovering. What needs to change then, do you think, before the New Zealand economy genuinely feels like it is growing again?
Yeah, look, we've struggled over the last 3 years, Craig, with high interest rates following that COVID period initially, obviously. Then it seems like every year from 2024 on, we seem to be hit by some sort of crisis. Electricity shortages in 24, Trump and his tariffs in 2025, and then the Middle East war this year. And so every year there's been something that's just really knocked the stuffing out of growth and set us back in terms of that recovery. We're hopeful, looking at things in late 25, early 2026, before the war came along, the worst signs that the economy was actually looking in its sort of best health and the sort of green shoots of recovery. I hate that phrase, but it's what everyone talks about, that they were starting to come together before the war started. We're hopeful that if the oil starts to flow again through from the Middle East, the prices come down, that there is sort of a resumption of that improvement in business confidence. We have seen it. Consumer confidence is taking longer to sort of possibly pull back out of that, but we are hopeful that people start to feel a bit happier around their spending, about economic prospects, and you do start to see a broader economic recovery coming through. But like you say, it's hard to know exactly how that Middle East situation and indeed Trump's actions are going to pan out.
Yes, and the New Zealand house prices, they do remain extremely under pressure. Buyers have plenty of choice, as you say, and listings are sitting at some of the highest levels in years. Do you think that this is finally creating some genuine affordability, especially for first home buyers? Or are the buyers simply waiting because they're worried that prices could fall even further, which is, it's kind of that human behaviour. Oh, can we save some more money if they drop?
Yeah, look, it's very limited downward pressure on house prices that we have been seeing. They've been a little bit up, a little bit down over the last 2 to 3 years. So I don't think there's enough there from a buyer perspective to go, oh, I might lose 10% if I buy now because it's going to be 10% cheaper in 6 months' time. But on the other side of the equation, of course, there is no hurry if you're a potential first home buyer or looking at trading up your property to make that move, because it's not 2021 when if you didn't buy this week, it was going to be way more expensive next week as well. So yeah, that sort of softness that we're seeing in the housing market, you talk about how affordability has improved. We're looking at sort of house price to income ratios now, which are at their lowest since 2015, 2016. So that's pretty good, but still, less affordable than they have been at any time prior to that. So it's okay from a first home buyer perspective. I think what we've seen over the last few months is talk about interest rates starting to rise here has come through, and we've seen the Reserve Bank lift the official cash rate. Buyers have probably just been a little bit more cautious again, particularly when it was unclear about how far those interest rates were going to rise over the next 18 months with the sort of fuel price spike that we were seeing and worries about that feeding into more inflation. Looking forward from here, if the Reserve Bank isn't going to need to raise the official cash rate, up towards 4 or maybe 4.5%, and those rate rises are more moderate, then I would expect that, buyers will start to have a bit more confidence that in 6 or 12 months' time, when interest rates have risen, they can still service that mortgage. So we might start to see a bit more demand coming through later this year or into 2027.
Can I pick your brain, Gareth, with regard to this Iranian war? If boots are on the ground, the Americans decide to invade, the blockage continues. already you guys have got quite high petrol prices, the same in Australia. What is likely to happen? Like, you must have some kind of modelling that you do on these big bangs when they happen. I mean, this is absolutely unprecedented. I mean, it could be very, very messy between now and the end of the year.
It could well be. I mean, at the moment, look, we did a set of forecasts in April where we did have petrol prices staying at elevated levels for a 6-month period and then not coming down particularly quickly. We have been surprised, I think, over the last month or so as, there's been signs of some sort of resolution, temporary though it might be, how quickly those oil prices have come back down. So our current forecasts are, things are looking a bit sunnier and the economy recovers. But certainly our April projections were more pessimistic, and it's just taking longer for recovery to get embedded because household incomes are being squeezed by those high fuel prices and it flowing through into higher prices for other goods and services, more than we possibly will see if petrol prices do continue to moderate from here.
It reminds me of that movie a few years ago called Everything, Everywhere, All at Once. We are joined by Jennifer Beveridge. She is the Chief Executive at Tenants Victoria. Are we seeing, do you think, the start of a much bigger rental affordability problem across Victoria? What's going on?
Good morning, Craig. I think your earlier description of everything everywhere all at once might be applicable in this situation too. We don't know why the rents are going up so much, except to say that demand is very high and availability is low. Renters are telling us constantly that they're struggling to find places to rent when they need to leave. And as you say, $600 a week as a median rent is a lot of money to be paying.
Property investors say that rising land tax, higher interest rates and recent changes to negative gearing and capital gains tax are making rental properties more expensive to own. This is a real big debating point, isn't it? Because if investors' costs keep rising, do tenants inevitably just end up paying the price?
Well, I think the question about the law reform that we've had here in Victoria increasing costs is a valid one. We have had a lot of reform in Victoria. I would put to you the other perspective on that though. And if landlords are finding that their costs are increasing so much, that would indicate to me that they were offering as housing to someone was below standard. We're not talking about significant luxuries in homes. We're talking about properties meeting minimum standards, being able to be warmed, having doors and windows that close properly, appliances that work. If it's costing a lot of money to upgrade properties to do that, to meet those requirements, I think that's a reasonable thing. There is a cost that comes with any sort of investment. Housing is an expensive asset to own and it needs ongoing and, at times, considerable investment.
Dead right. And behind every rental statistic is a personal story. We've got many renters being pushed further away from jobs, schools and family simply because they can no longer afford their neighbourhood. How much of a massive issue is that with the tenants that you're talking to, because they've got jobs in the CBD or close to the CBD, they're being pushed so far out? Just the petrol, the gas money to get into work is quite significant these days.
Yeah, look, I think that's a really important point that we often forget. We talk about housing as a bricks and mortar, as a financial investment. We often forget the people who this relates to. And it is people who have jobs nearby who then do add an extra 20 minutes, half an hour to their commute to get into their job. We think about families who then become dislocated from their communities because their kids have to change schools, they might have part-time jobs, they've definitely got friends nearby. So I think there are lots and lots of aspects to be considered in the fallout of expensive housing.
Grab your weekly dose of inspiration to help build a real estate portfolio. We talk to the best in the business every day. Learn from the professionals and know your property with us.
But I do kind of wish that at the moment I was into Christmas. With everything that is going on in the world right now, the Christmas lovers have got that switch, to think about Christmas in the future, maybe smile, block out the chaos and the tension of world conflicts, if only for a few moments. It's 162 sleeps until Christmas morning, the new way to possibly forget about conflict, even if it is for a fleeting moment. It's better than holding your head in your hands saying, oh no, what is next? Now, if you've been reading the headlines lately, you'd think Australia's property market is slowing everywhere right around the country. Sydney and Melbourne numbers are down, while many regional markets continue to perform strongly. PropTrack data, it does tell us that there are regional cities quietly attracting buyers, investors and families thanks to the affordability factor. That is the point, isn't it, at the moment, with so many different markets and different speeds?
100%. So Sydney and Melbourne, I guess, equate for the vast majority of Australians where they own property because they're such large markets. So it's very easy for the mainstream media to report on, for the most part. I guess there's an element of accuracy there. But once we break it down and look at a lot of the data behind each different region,
yes, as capital city prices remain challenging, more Aussies are looking seriously at regional centres where they can still buy established homes, secure larger blocks and enjoy strong local employment. Should more people then, do you think, consider relocating if it means better long-term value?
Yeah, there's definitely a lot more value out in the regional areas. And when we look at the Sydney and the Melbourne versus some of the major regionals, we look at the affordability index, which looks at the median household price and the median household income for an area and expresses an index of how affordable it is for the local demographic to be buying there. So if we can start broadening our horizons to the Townsvilles, Toowoomba's, Wagga Waggas, or Wodongas, some of those still major employment hubs and a reasonable commute to the capital cities, we can find somewhere much more affordable where we still get that nice 500, 600, 700 square metre block.
Yes, regional Queensland that you're talking about, it really does continue attracting attention. You mentioned Townsville, also Toowoomba and Mackay. They all combine affordable housing with expanding industries, including the health, the education, defence, logistics and energy. Are regional employment opportunities then now becoming, do you think, just as important as property prices? What do you think?
100%. Like, people need to be able to get employment to be able to relocate to these regional areas. But Townsville, as you mentioned, Townsville's economy it's the strongest regional economy in Australia at the moment, and its unemployment's at all-time lows. So if we can find employment there but have a far greater chance of affording the property that we desire and the lifestyle in many of these locations, if you're in a position with your employment, and work from home really comes into the consideration here. So if we've got the ability to work from home, we can afford a better quality property and have a better lifestyle.
And detached homes, now they continue attracting strong demand right across Perth at the moment, especially with quality established properties. Buyers, now they've got a lot more time before making offers instead of these rushed decisions. It is a nice position to be in. Is this then, Matthew, more of an even property market and what we'll expect in the next 12 months?
Yeah, I think you're right. Look, our investment philosophies have always pointed us towards, even though we're buying for investors, we buy things that are attractive to owner-occupiers in areas that are driven by owner-occupiers. And that's the sort of stock that's still performing well and selling quite quickly. But even with that sort of stock, we're hearing agents talking about running, instead of 7-day campaigns, they're now running 14 or 21-day campaigns. And that's part of the reason for the increase in days on market as well. But the demand for that owner-occupier product, especially if it's ready to live in and doesn't require any work, is still very high, but there's that little bit more selection around, and so buyers are gravitating towards that sort of property, and that's why you've got more buyers through those home opens and more offers being written, and you've got the inferior stuff just sort of sitting on the market for longer until the seller adjusts their expectations to the new reality, which is we're now in a slightly more normalised market.
Yes, it is time for Real Estate in History, having a look at the Perth real estate market back in the 1970s. It was regarded as Australia's quiet western city. The mining boom, it was beginning to transform confidence. Suburbs were spreading north and south, and families could still buy generous blocks close to the city. Homes in suburbs like Scarborough, Como and Willetton were often selling for under $40,000, while beachfront locations that now command millions of dollars were also considered at the time affordable. Now, you're one of these buyers that's buying into Melbourne. There's been some pushback that you're getting from investors who are still hesitant about the Melbourne property market. I'd be really interested to hear some of those comments that you're getting, that pushback from investors, and why they're feeling a little bit hesitant about Melbourne right now.
Look, it's always difficult for people to be one of the first to act in a market. Unfortunately, that's generally how you get the best result. I think last time we spoke, I compared Melbourne now to Perth back in 2019, where there's more stock around, there's less buyers, and that's also been exacerbated by the budget changes, where people have, and rightly so, have been sitting on their hands for a while to figure out exactly what this means for investors and whether established property or new property is the right thing for them moving forward, and what tax advice they need in terms of structures. So there's a lot of reasons why people are hesitant, but putting that aside, there is general hesitation always for people who want to wait for the masses to pile in before they get the confidence to do it themselves. And that's certainly not the right approach. I think the old Warren Buffett quote of being fearful when others are greedy and greedy when others are fearful is definitely appropriate here. And that's what we're pushing our clients to do, because that's where we've seen a lot of success for our clients in the past. But it's not always an easy conversation or an easy decision for the buyer to make, because they've got that inbuilt sort of fear and risk mechanism that's operating most of their decision.
We connect you to the best real estate information across Australia. The Real Estate Podcast.